Key indices trade near the day's high as stocks stage a rebound after Friday's weak close, with energy, healthcare and industrials being the big gainers, even as IT drags. Reliance Industries puts a resilient show despite headwinds in the O2C business. Streamlined retail operations, strong geo performance and FMCG expansion are key positives. Analysts lift their target price for the stock on the strong show. M&M is set to buy 59% in CV maker SML Isuzu from Sumitomo and Isuzu, to be followed by an open offer to the public. Mahindra Group CEO Anish Shah says that blended deal valuation is fair, and he hopes the scale-up in the business is up to 20% market share in a decade. Maruti Suzuki chairman R.C. Bhargav says 88% of Indian households can't afford to buy a car. He also challenges the premiumization argument, saying that India's base of high-income earners hasn't expanded. Anant Ambani is appointed to the Reliance board as an executive and whole-time director for a period of 5 years from 1st May 2025. Anant was earlier a non-executive member of the board. Hello, good afternoon. You've tuned into Business Lunch, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala, and thank you so much for tuning in as always. A good Monday shaping up for the markets, right? We have moved up further higher in today's trading session. 24,350, around that mark is what the Nifty is trading at as of now. So keep an eye on that. 1.2% gain, 3% gain. Day's highest point is what the Nifty 50 is trading at, up 300 points in today's trading session. So yes, market surely doing well. Broader end of the market, let's pull that up. Let's pull up the Nifty mid and small cap as well, because that too is doing well in today's trading session. Mid cap is up 1.6%. Small cap is also managing to hold on to gains of 1% in today's trading session. And do not forget, it did go in the red. So that recovery that we've seen coming in for the market and that up move is surely something that's very interesting. Nifty Bank, that's also trading near the day's highest point as of now as well. Good uptick on that front, 1.5%. Now, PSU Bank specifically are also doing well. So let's keep an eye on all those PSU banks as well as private banks. Let's pull up the Nifty contributors right now, because we have Reliance as well as these banking names, private banks, which are doing well in terms of the contribution that's coming. So look at it. Reliance is there in the top supporters for the market. Then we have ICICI, HDFC Bank as well as SBI. So that is why banking space surely is doing well. Other than that, on the flip side, we have IT that's not managing to hold on to gains. HCL Tech is among one of the top drags coming in for the Nifty 50. Nifty IT is the sector that is trading in the red, so keep an eye out on that. But the stock in focus today is also going to be M&M as well as SML Isuzu. Why? Because M&M is set to acquire around 58.96% stake in SML Isuzu, and this is for around 555 crore rupees. Going to be to strengthen its position in the trucks and buses segment. So Darshan is joining in with us to give us details on this front. So Darshan, afternoon.
Afternoon, Vinny. So M&M is high in today's trade, and SML Isuzu, if you see, it's down more than 10%, or currently down 10% trade. And the reason, M&M has announced acquisition and also is going to make the open offer, and open offer price is at a 12% discount to Friday's closing price. So M&M is going to acquire nearly 44% stake from promoter, that is Sumitomo Corporation, and 15% stake from public shareholder, that is Isuzu Motors, and this total stake would worth rupees 555 crore, or say 59% stake. And apart from this, M&M is also going to come out with an open offer to acquire additional 26% stake, and for this price is fixed at rupees 1555 per share. This is an all-cash deal, and deal is expected to be completed by December 2025. So what was the objective of M&M going ahead and acquiring SML Isuzu? To expand its truck and commercial vehicle business. So in the segment of more than 3.5 ton commercial vehicle, currently M&M's market share is 3%. Post the acquisition of SML Isuzu, its market share will increase to 6%, and by FY31, it's targeting the market share to increase to in the range of 10 to 12%, and by FY36, market share should increase to more than 20%. So this was the objective. And in the last 3 years also, SML Isuzu's turnover has increased from more than rupees 900 crore to currently around rupees 2200 crore. So overall, it's very positive for M&M, and that's the reason stock is higher. But considering the open offer price, a discount of 12% to Friday's closing price, you are seeing a sharp downtick in SML Isuzu. Also, till Friday, SML Isuzu was almost 26% higher in 2025.
Okay, thank you so much for that, Sudarshan. We'll keep an eye out on both these stocks. But earlier today, Shriram Finance spoke to Anish Shah, the Group CEO and MD at Mahindra Group. So listen in to what he had to say in terms of the deal as well.
I would just say that it's a fair valuation for all concerned. And for us, we've always followed a very structured process in terms of focusing on certain businesses, investing where it makes sense. And it made sense for us to invest at this value because we feel that from here we can grow the business and deliver returns for our shareholders, which is a very important aspect in how we look at this. And therefore, a blended value is what we really saw. That's what we're finally investing. And on that basis, we feel that it's a fair and appealing deal, which has a very good strategic fit as well. We feel that it is important for this to stay as a listed entity and be able to compete in its segment effectively. We're in a strong leadership position in almost all the segments we play in today. SUVs, we've gone from a 12% to a 23% market share. And we don't really play in all the SUV segments as yet. Despite that, we're at 23% market share. In tractors, we've gone from a 38, 39% to 43, 44% now. In electric three-wheelers, which is a space where we really had a small business in ICE three-wheelers at a 7-8% share. We are now at a 43% share. We will leverage what we have in the business today because we are in a growth mode. This is not an acquisition about a cost rationalization. This is an acquisition to help us broaden the footprint to go bigger on growth. And that's where the dealership footprint that exists in SML Isuzu will be a very meaningful one for us. ICE and EV, and SML Isuzu also has a very strong pipeline for electric vehicles. They have showcased some of that at Bharat Mobility, and that combined with our strengths in EV will allow us to put forth a compelling set of products. I don't have a timeline on that, but from my understanding, it's going to be in the near future, not too far off.
And now let's shift focus to the automaker Maruti, which holds a huge share in India's passenger vehicle segment, has flagged off concerns on growth on that front. Sudarshan is joining in with us and still with us to actually give us more details on this front. Sudarshan, what are we seeing in terms of Maruti? That commentary doesn't seem great, right? So it's a bit of a worry, though the stock is up 1.5% right now.
So commentary was cautious on both the fronts, first on FY26 outlook and also the concerns that have been ongoing for entry-level segment. So first on FY26 outlook, if you would have heard, SIAM, that is the industry body, had projected that FY26 domestic growth for passenger vehicles is likely to be in the range of 1 to 2%, and that would be against 3 to 4% that the industry had seen for FY25. So as per SIAM, FY26 picture for passenger vehicle domestic growth is looking grim, but the major concern, especially for players like Maruti, which is the leader in entry-level segment, now companies saying that sales have not been falling just for the last 1 to 2 years, but it's been falling on a continuous basis for the last 6 years, that is since FY19. If you compare with the sales of FY19 with current sales, currently, sales are down 10% against the sales the company used to see in FY19. What's the main reason? So the main buyers of this segment used to be people in the lower household income. Now, as per RC Bhargava, 230 million households are in the income bracket of earnings of less than rupees 5 lakh. Now, considering the sharp increase in prices of these cars in the last 5 to 6 years, people in this bracket have stayed away from buying the cars, and the reason increase in car prices are mainly because of regulatory changes. Now, considering regulatory changes, all the companies had to meet those regulatory norms, and also commodity costs have been increasing sharply in the last few years. Let's take a look what exactly RC Bhargava had to say on this.
The demand has been falling for the last many years. If you look at the small car market, or let me go beyond that. If you look at the household income distribution in India, 200 million out of 300 million households are below 5 lakhs in income. The people in this lower income households, and they comprise the bulk of the Indians, were suddenly faced with sharply rising costs of small cars, largely because of regulatory requirements and the cost of meeting those requirements, partly because of commodity prices and other things. But overall, the prices have gone up very sharply. And so they have dropped out of the market. The projections made by SIAM on the auto industry for 25-26 do not show a better picture than 24-25. Last year, we grew at about 3%. The forecast made by SIAM is 1 to 2%. So the domestic demand is not growing beyond what it has been in the past, maybe falling a little bit. Where we see a silver lining is that our exports are going to grow. We grew exports at 17% last year. We expect that exports this year may grow at about 20% this year. So that is going to make up a lot of what may or may not happen. People at the entry-level segment have numerous demands on their income. There are people who don't generate surpluses every year. And a lot depends on each family what their priorities are. The amount of money which is required to make up the extra cost of buying a car runs into 70,000-80,000 rupees. I'm not sure how much money this income tax refund will give, or not income, but lower income tax rates will give them. Will it give them enough to afford to buy a car and pay for the higher installments? Some families maybe yes, some families no. But we have to see this thing just started, the impact has just started to come.
Okay, now let's get more stock specific and on to some other stocks. Reliance Industries, that reported its fourth quarter numbers as well. Performance across all key segments was a steady quarter. Revenue that jumped nearly 9%, driven by strong growth in its digital service as well as retail business, which offset a subdued performance in the energy business. Rima is here to decode the numbers for us. Rima, give us an overview of what happened for Reliance.
Well, it's a strong showing for Reliance Industries in Q4. Profits jumping up 5%. Revenues advancing nearly 10% on a sequential basis. The key positive or the highlight was the acceleration in Reliance Retail. So Reliance Retail's top line up 16% year on year. EBITDA went up 14.5%. And this is a sharp improvement compared to what we've seen in the prior quarter. So just to put it in context, Reliance Industries revenues in the current quarter 16%. This compares with 7% in Q3. It compares with a decline that we had in the prior quarter. And that's what the street likes, the pickup in Reliance Retail. Oil to chemicals was subdued, but still ahead of what the street was anticipating. And the telecom business, that's Reliance Jio, clocked in a steady quarter. The company's average revenue per users improved to 206 rupees. Subscriber additions look strong at more than 6 million on a sequential basis. Another exciting area is new energy, because new energy plans are now unfolding for Reliance Industries, and investors are keenly awaiting that. So Reliance has commissioned a gigawatt-scale AGT technology-based solar module plant. So that's the other positive. Brokerages are bullish on the stock. Nomura says it's their top pick in the energy vertical. They've got a buy rating. They've raised the target price to 1650. JP Morgan, Morgan Stanley also bullish on Reliance Industries. Also remember, in terms of milestones, Reliance Industries has become the first Indian company to have a net worth of more than 10 lakh crore rupees. In 2024, it had become the first Indian company to hit a market capitalization of 20 lakh crore. It just continues to see, scale new milestones. Back to you.
Okay, Rima, thank you so much for that. But on that note, we're going to slip into a very short break. And as we slip into the break, here's some good news that is coming in for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app from the Apple Store or the Google Play Store, or you can just scan the QR code on your screen. Welcome back to Business Lunch on CNBC TV18. Now, there have been conflicting signals over US-China trade war, with Trump saying talks are taking place and China denying any have been occurred so far. US Treasury Secretary Scott Bessent did not back President Donald Trump's assertion that tariff talks with China were underway and said that he did not know if the US president had talked to the Chinese president. Take a look at this report.
Is the US talking to China about a deal on trade or not? Last week, Donald Trump suggested that he had been in touch with Chinese leader Xi Jinping.
I spoke to him numerous times.
However, he didn't say when the contact had happened or what they had discussed. And Beijing has denied that any talks took place. Over the weekend, Treasury Secretary Scott Bessent was then asked whether talks were underway. In an interview on ABC, he said, "I don't know if President Trump has spoken with President Xi. I know they have a very good relationship and a lot of respect for each other." Bessent said his contact with Chinese counterparts had been on issues besides trade. When asked why Beijing would deny that talks had taken place, he said that policymakers there were playing to a different audience. Trump has imposed tariffs on trading partners around the world and 145% levies on Chinese goods. Beijing has responded with 125% duties on imports from the US. The tensions have roiled financial markets and raised fears of a global economic slowdown, though none of that appeared to rattle Trump last week.
As you just said, the tariff will be reasonable, very reasonable, and that'll be the end. That's the deal.
In an interview Sunday, US Agriculture Secretary Brooke Rollins said that the US was holding daily conversations with China over tariffs, but didn't elaborate further.
And on the same lines, let's also listen in to what the former ambassador of US to China, R. Nicholas Burns, had to say on the issues both countries face.
Both governments are trying to figure out how do we climb down from the triple-digit tariff battle that they're in. I think that neither economy and really neither government can sustain a trade war like this at this volume and this depth of seriousness for several months. So I would anticipate that both sides would want to reach out to each other, probably quietly, and begin the process of trying to define, is there a trade deal in the future? And I think the logic for each of them and self-interest from each of them will push them towards that. But the problem is going to be how to negotiate this, how to do it effectively, because I think it will take some time.
Now, let's bring you some more news coming in from China. Now, the Chinese central bank has said that it will keep its monetary policy loose in order to keep the economy floating. It added that the yuan's exchange rate will be kept at the balanced and reasonable level. The statement came hours after the Politburo called for a cut in its interest rates and reserve ratio requirements. The Politburo meeting, chaired by the president, also sought to help struggling businesses with targeted measures in the face of increased external shocks like US tariffs. And moving on to the US economy now. A number of key economic indicators are set to be announced in the US this week, now which will determine the course of economy as well as the policy interventions of the Fed. On Tuesday, the US consumer confidence is due, while the unemployment data will be out on Wednesday. On Thursday, the US will release data related to manufacturing, while non-farm payroll data on Friday will show the extent of employment in the country. And moving on, another question in investors' minds is whether the Fed will cut rates during the next meeting as tariff uncertainties rattle the market. Here's a former Fed official, Dennis Lockhart, with his take on the same.
Of course, the data are always backward looking, and the data we've seen recently don't yet suggest to me that the economy is in free fall in any way, but there's certainly a buildup of anecdotal information and a buildup of snippets of data here and there that are worrisome. And I tell you, I'm increasingly concerned that the Fed is going to face a stagflationary situation later in the year, maybe temporary, but nonetheless put them in a stagflation decision dilemma.
Let's also listen in to some views on the market and the outlook going forward from some experts.
That's the real difficulty. What's priced in right now? We think we're past the peak in terms of escalating tariffs, and we welcome a lot of the de-escalation that we've seen recently. But now I think we're shifting into the slower burn around digestion. And this week, we've got more signals that all of this tariff turmoil is starting to really impact supply chains, and it's already making companies today change their decisions. This week, in terms of what we heard from earnings, one thing that really stuck out to me was how companies are rebuilding their war chest. They're figuring out, how do we increase liquidity? Maybe we're prolonging some hiring plans. Maybe we're enacting some layoffs already. And while the consumer hasn't softened yet in its consumption, the anticipation of a softer consumer is already leading to a softening in business activity today.
And moving on, a trio of polls show that a majority of Americans disapprove of President Donald Trump's handling of the presidency. Voters are also losing confidence in Trump's ability to handle immigration. Take a look at the report from CNBC.
It's nearly 100 days since Donald Trump was inaugurated as President of the United States for the second time. In that time, he has upended the global trade order, defied his own judicial system, and fired the starting pistol on what he called the largest deportation program in the country's history. So far, America appears to have buyer's remorse, with the latest NBC poll showing more than half of respondents disapprove of his performance.
Now, that figure only grows more stark on the economy, with more than 3/4 of Americans expressing disapproval in a New York Times Siena College poll. 44% of respondents say they expect to be hurt personally by Trump's economic policy. This as American equities have underperformed the rest of the world by the widest margin in more than 3 decades this year. The MSCI's USA index shedding 11% year to date. That's versus a 4% uptick for the rest of the world, the widest divergence since 1993.
Okay, on that note, we're going to spin to a very short break, and on the other side, we'll get you the latest updates on the Pahalgam attack. Welcome back to Business Lunch on CNBC TV18. Now, getting you the latest on what is happening in Pahalgam and where India and Pakistan's relations lie. We have Parikshit joining in with us to give us more details on this front. Parikshit.
Well, Defence Minister Rajnath Singh this morning briefed the Prime Minister for about 40 minutes on the security situation in the country and also India's military preparedness for any eventuality. Now, we have seen how the Chief of Defence Staff, General Anil Chauhan, met the Defence Minister on Sunday, briefed him about the security situation and how different forces were prepared. We've also seen over the last few days how Pakistan has been violating the ceasefire along the LOC. There have been at least 4 instances of ceasefire violation at different points at the LOC, and the Indian forces have been retaliating effectively all across the LOC. India has already been carrying out a diplomatic outreach. We've been seeing how External Affairs Minister Subramaniam Jaishankar has been speaking to his counterparts. He also spoke to Foreign Minister of UK David Lammy to brief him about India's zero-tolerance policy on terror as well. The Indian Navy carried out successful multiple anti-ship missile firings in the Arabian Sea as well. So there is a 3-pronged strategy. One, of course, a diplomatic strategy that's playing out, a military strategy, and also the government working out an economic strategy through, for example, suspending the Indus Water Treaty to corner Pakistan.
Okay, Parikshit, thank you so much for that and giving us the latest update on what is happening after the Pahalgam attacks as well as the ties between India and Pakistan. But on that note, we're going to wind down this edition of Business Lunch on CNBC TV 18. Thank you so much for tuning in. Up next, your Midcap Radar.